Like if I had my whole career to do over again, I would teach people about money.
Today, I am the passive income investor. We're going to break down my six-figure dividend portfolio. And on top of that, we're looking at Canadian bank earnings and then some motivational advice from the smartest people you have ever heard from. So let's jump right into this. Welcome back, my passive income investors alike. We've got some very important news that I'm excited to break down for you today. If you enjoy the passive income investor getup, I figure I'm trying to find a uniform that suits what I'm doing here because, let's be real, there's nothing better than cash flowing passive income. But we're going to head on over to my computer, guys, because I need to really fully break down my $113,000 dividend portfolio. It was up almost 114 this morning. Everything kind of leveled off today, but we got some finally good news I've been waiting desperately for when it comes to the bank earnings. Canadian Imperial Bank just came out with earnings. It has been one of the most suppressed banks in Canada. It's one of my largest holdings, and I'm down quite a lot on that position. I'm talking about a couple G's here, but she's finally coming back. So come on over, guys. We're going to break all of this down one step at a time.
All right, ladies and gentlemen, we're looking at CIBC hikes the dividend post to 2%. Before we look into the portfolio and see how much Canadian Imperial Bank's come back today, it's actually raising its dividend, but it's nice to see that it reported a 2-cent rise in quarterly profits. So the banks are still growing here, which is a great thing to know because especially in these lower interest rate environments, it's just they're getting a little more stretched than usual, I've noticed, but they're not doing that bad. They're actually in a fairly healthy position compared to like the negative sentiment around it. But Toronto CIBC is the second bank to report results for the fiscal third quarter, which ends July 31st. And being the fifth largest bank, it's nice that it hit earnings and actually beat earnings expectations. That means we're going to probably have a pretty good earnings season for the rest of the banks as well. Provisions for credit losses. This is the thing that really matters because this is the bank securing themselves against any financial crisis we might head into. So provision credit losses, or the money banks set aside to cover bad loans, increased 21% to $291 million, but the increase was mostly on loans that are still performing based on models. So I love the fact that the banks aren't stupid here. They know they might run into issues. They're listening to the people around them, and they're saving a loan loss provision. So they're putting money away quarter after quarter, just in case the banks run into issues. And their credit, they might be okay. It might cushion some of the blow, which I think is really nice. So let's just jump into the six-figure portfolio here, guys, and take a look, because here's Canadian Imperial Bank sitting down 13% of my portfolio, $2,200. But we're coming back. Like I said, we hit $102 or $103, and then it started pulling back. People started taking profits. But it's a good sign for the banks. It's a sign that we still are on a growth sector path for this, and I'm not too worried about it. So I have a drip setup that is buying me shares, and the fact that they increased their dividend is really going to help out. Dividends sitting at 5.7%. What an insane yield for a bank. I don't like banks for growth. Banks are just something, a lot of people don't like them because I do think they're non-growth. The regulatory issues around them ever since 2008, I think, has really subsided a lot of the bank's growth, especially coming into this time and day where things are getting a little bit more stretched for people. But I have no problem holding this here. Like I said, if the stock ever comes back to about 110, I will probably sell out a decent chunk to start leveraging money around. But I don't mind holding my banks. They have been my worst performers in my portfolio so far. But like I said, I'm in this for the dividend game and that wonderful cash flow. And remember, the overall portfolio is up quite nicely. Like I said, this morning we were sitting at right around 114,000 before profit takers came in. But it's a good sign that the markets are still pushing higher on a lot of my holdings. Down here, we can see we got Altria Group, one of my favorite stocks of all time. I'm going to be buying probably more of this. I can't help myself. I have an addiction to this company right now because if you guys don't know Altria Group, it's a tobacco company I talk about all the time. A lot of the dividend investors I watch have been buying this up. I have set these up on drips to continue buying, but I'll come back to that in a sec because I have it in my other accounts as well. We got GEO Group. It's been holding pretty much flat, but its balance sheets have been doing really amazing still. I'm really happy holding this company. So the utilities are still some of my favorites, guys, with SO and Northland Power here doing some of the best for the portfolio, which I've also set up on drips. Microsoft and Apple are mainly the only growth stocks in my portfolio right now that are actually growing really, really well. But I'm shocked that SO continues to push higher, which is why I had to set up on a drip. I don't feel like buying more at these levels because I've got about 5,000 or almost 6,000 US in this at this point with the capital gains. So I'm just going to set it on a drip, let it ride, and I'll buy into the all-time highs because I can't do much else with it, and I don't want to penalize it for being a good performer. So in this account, guys, we can take a look and we can see we got 3M purchased on your behalf. You guys voted for 3M, and it's been holding flat. Hasn't been doing too much in the portfolio because the Canadian dollar is down since I bought it, but the overall asset value or the stock price is down. So I'm not really losing too much on this. I didn't buy a whole lot of it. I have it in my other account, which we'll check out as well. I bought $2,000 worth. But like I said, so here's Altria Group again, guys. I've been really buying the heck out of this company. It also has one of the best dividend yields right now, guys, sitting at almost, like I said, 7% yield. So I'm gonna love gobbling the dips up on this because I have enough now that I'm making like a really decent amount in dividends, which we'll check out in a second off these companies. British American Tobacco is a shame that I can't set this up on a drip, but this is also one of my favorite tobacco stocks. So between Altria Group and British American Tobacco here, these are the ones that I'm really going to push for this year because I just can't get over like the valuations in these. I think they're deep discounts and I think they can really afford their dividends. So I'm going to sit back and look forward to the next 5 years of riding this income. I think there's going to be no issues with that. Some of the newer purchases, J&J, Starbucks as well, guys. I just started purchasing Johnson & Johnson to add to my drug portfolio, the only company that can sell opioids and ecstasy. Well, it's ketamine, but it's the same thing as ecstasy. So I've been gobbling this up a bit because it's been quite suppressed, which we can see here as well, guys. It's been running flat for the last few years. Hasn't really had much growth, so I've been really buying it because the balance sheet's still growing. So I wouldn't mind picking up a few more shares in that. Starbucks is one that I've been dying for it to crash, and it just keeps hovering around what I paid for it. I want to buy more of it, but I want it to come down. In the last account, guys, we have my index funds, which, speaking of index funds, I'm going to show you a video from, like, I think it was the 80s. What a wonderful video. It was Jack Bogle in his prime, and I really want you guys to watch that and learn something from it at the end of this, but it has a lot to do with these index funds that he actually created, which has to do with Vanguard. But let's just take a quick look at the dividends. If you guys haven't seen the portfolio before, here we can see my dividend payouts. I have reinvested cash, which is in the green, and the cash that I'm getting paid out because I'm not making enough. It's not M1 Finance. They don't do fractional share buybacks. They only do full share buybacks. You have to be making enough to set it up on a drip. So you can see my Canadian dollars, I have everything set up on a drip, which equates to almost $2,000. And actually the video, when I posted at the beginning here, guys, I actually forgot to add some dividend income. I'm actually making an extra $30 more than I listed on the board, which I'll explain in a second. But here we can see all the best income, guys, and we're taking a severe look at MO, and BTI is making up a very healthy chunk of my dividend income at this point, and there is a separation between US and Canadian dollars in this account. The final number that I always show you guys is in Canadian dollars because I live in Canada, but mind you that this down here is US dollars that I'm getting paid out in. And because this is a US account for these dividends, it's all just purely US dollars being played with here, but I always convert it to Canadian. So if we head on over into my managed account, because this doesn't have a US currency account to it, it's all converted to Canadian. So you can see that the amount that I hold of MO in here is 6,000 CAD. And the amount that I hold in here of Altria Group, where is it? I just lose it already. There we go. Altria Group is about 4,800 US, which is about also 6,000 CAD. But we can see that in here, we're making about 437 in dividends. And in this one, we're making about 320. But that's US, and this is Canadian. So it's starting to get a little confusing with the amount of stuff I have going on in my portfolio. I'm sorry about that, but I'm here to teach you guys some stuff. But just a quick update with that, so you guys understand kind of what's going on here. But let's move on over. You can see that I make $68 on VFV. But if you guys want to pause this, you can take a look at all my dividend income analyzes for yourself. But I really want to spend some time. Actually, before I finish up here, guys, let me show you. Got to show you the account that I keep forgetting about. This is where the extra $30 is coming from that I constantly forget to show you guys, which is 3M, which actually looks like Canadian dollar might have come back. It looks like we might be down on the Canadian dollar and on share price this time instead of when you're playing with different currencies here, guys, you also can make money on the currency going up or down. So even though you could be down on the share price, you could be up on the overall currency price. But I own a couple extra shares of 3M in here for you guys. So let me show you the most motivational advice that I think will really help you guys out and really keep you in a nice calm position during I think it was the 1980s housing crash. I don't know, this video is so inspirational, and I'm going to show you a bit of Grant Cardone as well. So let's just jump right into this one, guys.
Last month on Louis Rukeyser, you summed up your investment philosophy as buy everything and hold it forever. Do you still subscribe to that in light of what the market has been doing, or would you unload some things now?
No, my theory is not subject to the ups and downs, the peregrinations of the stock, the unpredictable peregrinations of the stock market. It's painful to do, but I think the idea of owning the stock market is the best approach to equity investing, and perhaps I didn't make that thoroughly clear there. But I think the idea of buying and holding forever and not trying to make adjustments requires that you've gotten it right in the first place. That you can only hold tight if you've bought right, if you will. And that is to say, have an asset allocation that has something to do with how many years you have to accumulate money, how much resources you have at stake, how much income you need, and how much courage you have to ride out the peregrinations of the market. So you've got to take all that into account from that simple statement. I don't know anybody who has ever been successful in timing the market. I don't even know anybody who knows anybody who has ever been successful in timing the market. Last year, these last 2 years, the index, S&P index, has outperformed roughly half of the funds, a little bit less last year, just about half this year. I don't regard that as a significant long-term sign at all. First of all, the number of funds is not a relevant statistic. We use it because it's convenient, but if you've got a few little funds in there that do well, they count just as much as a few big funds. The reality is, no matter what the statistics tell you, indexing always wins. People in the office who are really petrified by this market decline, that it's the best thing that ever happens to them. And if you think about it logically, of course it's wonderful. I mean, think of, say, the young man I was talking to yesterday who's probably 25 or 26 years old, and he's got the rest of his life in invest. And I said, well, let's suppose that Chris Scott, his name is. I said, let's suppose, Chris, that the market's going to end up at Jim Glassman's 36,000 by the time you retire. Do you want to be investing all your money when the Dow is at 35,000, or invest it all when it's 9,000? Just think about that for a minute. In other words, you want a long time to invest at low prices, and it's certainly a frightening advantage for those of us who have some money at work in the market today to think of this as a blessing. But it is a blessing because in the long run, investing depends on accumulating money at sound prices and not inflated prices like we have. I also think the general economy and the financial markets are well served by a return to reality. When you leave reality and depart from the laws of gravity, there's nothing but bad things that can happen, and the higher you fly, the more you fall. We flew quite high enough, and I think it's a blessing, maybe a blessing in heavy disguise, a blessing that we've come back a little bit toward the ground.
How many of you have a Kia or a retirement account of some sort? Yeah, good. It's garbage. It was a bullshit thing to rob you. How many of you own a home right now? Let me see a hand. It was bullshit. It was bullshit. And you put your money in there. You wanted money and you bought a house. You wanted money and then you put it in in a retirement account. You wanted money and then you gave it to Wall Street. You can't even get your money. What'd you do, man? What were you thinking? Oh, my mama told me a house is a good deal. Do you know any rich people that say, my house made me rich? Like, if I had my whole career to do over again, I would teach people about money.
If you guys enjoyed this video, remember to slap a like and consider subscribing. It lets me know that I'm doing a good job for you, and it lets me know I'm on a path that is going to help longevity for this YouTube channel. So stay cool, stay awesome, guys. I look forward to talking to you real soon.